video is a follow-up to the previous one. We're going to continue to talk about parabolic moves, but now we're going to focus a little bit more on the retracement or the consolidation inside of those parabolic moves. And as I said, let's do a real quick review. The formation can essentially, the retracement type pattern can essentially take three forms. Basically what you got is a big down move, right? We said you could either get a retrace up like that, or you could get it just going sideways, or you could get it going down a little bit like that, and then each one of these continues. Okay. Well, there's a little bit more to it than that. These are just the general direction is all that I was pointing out here. So it's being really general. It can either retrace up or sideways or down. All right. But within that, there are more specific formations that those consolidation patterns can take. So what are they? Well, we're going to talk about two of them, and those are flags and pennants. So basically we'll go to the upside this time. So the market makes a nice vertical move up. Then the market rests a little bit. So people are enthusiastically buying. It's gone up a long way, and of course now you're familiar with how the bid auction market works, and people's fear and greed and so forth. And so now people say, wow, it's gone up quite a bit in a short period of time. Somebody bought down here, somebody maybe bought here, well, somebody did buy there, and all the way up, and they're saying, wow, I made some good money in a short period of time. I'm out, man. I'm taking my money and going home. And so that's what happens. And so the market consolidates here as people are taking profits. Maybe a few people are shorting. And then, so the market just kind of pauses, right? A little bit of uncertainty. Is like, whoa, what happened there? Also, if it's news, which it usually is, then people are digesting that information now. First, they did have a knee-jerk reaction to the news, and now they're evaluating, wait a minute, is this really significant? Is there going to be any kind of a long-term effect to this? You know, they're digesting that information to determine whether or not they think the market will continue to move in this direction or it's done. And so the market consolidates a little bit here while people are thinking about those things. So those are all the different dynamics that are happening in people's minds, and that takes place in their behavior when they buy and they sell. Then, so this now can form a couple of different things. It can either, and I'm going to start with a clean chart again, just because these things can get kind of messy. Whoops. And I'm also going to use my line tool instead of my freeform tool, since my freeform writing is very, very bad. Really hasn't progressed much since the 6th grade, I'm embarrassed to say. Okay, so let's see, we get a couple bars going up, and then we're going to get consolidation. So what this is called the pole, P-O-L-E. And then, let's say that we get some narrow range bars like this. And as we talked about, this is one of the patterns that would look like this. And then the market decides to keep going up. So this is the flag. That's what a flag pattern looks like. And it looks kind of like a flag because here's your flag pole, and then there's your little flag waving in the breeze. And that's why they call it a flag pattern. And as you saw, that's one of the patterns. So just, it's nothing, you know, spectacular, bizarre, or unusual, but it's just one of those forms that people have identified to be able to talk about it. Now another type is the pennant. Pennant, same kind of thing. You've basically got your flagpole, but this time instead of it just having roughly the equal length bars, remember they don't have to be exactly the equal length to each other, but you know, they're roughly in that range. You get some inside bars, and that's the defining aspect of a pennant, is that you get a bar here, and then you get two inside bars, a bar that's inside that one and a bar that's inside that one. This forms this type of a triangle, basically. It's basically a little mini triangle, and that's called a pennant. So they're both the same idea. You can make big distinctions between the two of them if you want to. I don't feel that it's necessary. I only point them out right now to identify them, since you will hear about pennants and flags, and probably you have already. So these just fit into our parabolic pattern, and they are just different ways that the market consolidates. I don't care what we call them. It doesn't really matter to me. It's all the same basic stuff. I don't find one of these to be a higher probability trade than the other. We're still using the same things. We're looking for, if K can hook in our direction, if we can get some kind of candlestick pattern to kind of give us an indication that maybe we're going to continue going up. All these things are great. Sometimes what you'll see in these pennants is you'll get something like this. That's pretty nice if you can get this, because then you can enter, see, you're entering above the high of the pennant. And if this continues to go, now the market won't always do this and give you that easy of an entry, right? But if it does, pretty cool. And basically, again, our stop is 1 bar. We're just looking for 1 bar range. If we're getting in above here, we just can put our stop below the low of whatever bar we're entering in on, because we want this thing to just take off to the races. That's the type of energy, that type of action we're looking for. We're not looking for any indecisiveness. After, we're trying to get into another parabolic move, in other words, right? This is a parabolic move, consolidation. Parabolic move, consolidation, and maybe we'll get a third one. Third one's less likely. It's just like one, or like a 5-wave symmetrical pattern. First retrace is the highest probability. Second is the least highest. Because why? Because you get more 3-wave trends than you get 5-wave trends. Why? Well, because you can't have a 5-wave trend unless you have a 3-wave trend. So obviously, mathematically, you're going to have more 3-wave trends than 5-wave trends. Same thing here. So the highest probability time to enter these parabolic moves is that first consolidation pattern, and the second one is less likely, usually also has less follow-through. So even if you do take the second one, it usually has less reward to it. So let's move over to our real charts and take an example of how these patterns look on some real charts. Let's go ahead. Alright, so here we are. Now again, remember, what I just showed you is an ideal textbook pattern. It is the archetype to have in mind. And as I said in one of the earlier videos, there's archetypes of mothers and fathers, and nobody really lives up to that ideal archetype. Same thing in the markets. There's all these patterns that you'll study and read in books, and see these patterns illustrated for you, but don't expect them to all be perfect. Look for the idea, the concept of what's going on. The market is not so neat that it's going to give you those perfect patterns all the time, or even most of the time. Okay, so here we go. Here's a nice parabolic move down. Remember, gaps are part of it. It's very vertical, right? Whoops. Actually, that's not the tool that I wanted. What am I doing here? Click the wrong button. So that is a very vertical move down, very dramatic angle on that impulse move. So that's the first thing that we look for and say, okay, from that high to that low, and you can use this. I mean, this is one way you can evaluate it. Is this a parabolic move? Well, draw a line. Draw a line, see how steep that angle is. And you want it also not to be a steep angle, but also a wide range move, right? So, yep, that definitely qualifies. Okay, so now let's look at the retrace. Well, what happens here? We've got, here's our last bar, there's a bar. Now we've got an inside bar and another inside bar. Remember, that's the key to the pennant, is that you're getting these inside bars. Okay, so is it an absolute perfect pennant? No, not quite, but it's got that basic shape, and you've got inside bar, inside bar. So all of these bars here are not making any new move to the up or downside, and what's really happening is the market is contracting, contracting, contracting. So not only is it narrow range and waiting and pausing, and those are all rather neutral bar formations, opening and closing around the middle of the range of the bar, with wide wicks on the top and the bottom, but also the range from high to low is getting more and more narrow. And so that is building up an energy that's ready to pop and explode in one direction or another. Now, for how long? We don't know. Nobody knows. The general wisdom is that you measure this move and you look for that to continue on, basically the measured move principle. So for the next impulse move to equal the first impulse move. I don't follow that. I don't find that, again, the market is that neat or nice to us, or that convenient. So, a lot of this stuff's nice in theory, but you watch the market enough and you just realize it is not that easy or orderly. So anyway, that's fine. So we get a little bit of money on this, and that ends up being the end of that parabolic move. It's just a 1, 2, 3 pattern. Okay, so we got a nice little pennant there. And again, the key to the pennant are the inside bars. All right, now let's do a little quiz. And this is an important quiz, and it relates back to Foundations Course 1, something I say about parabolic moves in Foundations Course 1. So here we get a nice strong move down. And now we get a retrace. Okay, this retrace right here, we would say, forget about it. Okay, if we consider this a parabolic move down, then now these bars are not super wide range, but pretty good vertical angle here. Let me draw this and take a look. Yeah, pretty good. Not super steep, but pretty good. So anyway, that's borderline parabolic. It's definitely all bearish bars here coming down. As it gets toward the end, again, this is typical. It starts out wider range bars. See how these are narrow, 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 and then they get wider as they burst out in a new direction. But as it starts going toward the bottom of the range, they start getting more narrow range again, and then they even get longer wicks on the bottom. That's the market getting less decisive and the enthusiasm waning in that direction. Now, if this was going to continue down for a parabolic continuation pattern, we would want to see, again, what? Very narrow range bars, very little retrace, if any, and pretty much, overlapping bars in some way or another, either slightly moving up, going sideways, or slightly down. But what's happening here? We're actually getting a gap up here, and then we get a open at the low and close at the top, and we go all the way back to the 15 EMA. Generally, on these parabolic moves, you don't want the retrace to go back to the 15 EMA. If it does, that's too far. The retrace is too strong. Now, if you remember, one of the reference we make to parabolic patterns in Foundations Course 1 is to not trade the first retrace after a parabolic move. And, of course, the exception to that is this new parabolic pattern that I'm teaching you now, the new price pattern. But if you get, the reason we say that, these regular type of sine wave moves, these stronger moves against the impulse move, this is not good at all. We don't want this. We're not going to take this short, in other words. So it comes back up. Why? Because first of all, there's so much energy that's already come to the downside. And then if a lot of energy comes back up, it's bad news for the bears. The only good news for the bears would be if no more bearish energy came in, then people would say, oh, this thing's still bearish. But as it comes back up, now people are saying, well, this thing's already been sold the heck out of, and now all that bearish energy is gone. So if anything, you would actually take it long, and that's a decision you'll have to make sometimes. You got to look at your other energies to see whether that lines up or not. Sometimes you'll get like a first cycle low after DAD turns up. on these kind of patterns. That's pretty common. Okay, so here we go again. Now these parabolic moves can take a bunch of different forms, as all patterns can. But here we get, a wide range bar, we'll retrace, and again another wide range bar, and get a little bit of a flag type pattern here. Then we get another parabolic move. This one's pretty much, I would just say, straight across. It's just pretty much a consolidation pattern. Now again, you're going to get little bars above, little bars below, but you're looking at the dominant price action here. What is it? On this one, for example, you get 2 bars down, then you get that bar. That would be a close above the previous open, but it's never triggered. You have to enter above the high of that bar. And then you get an inside bar, and then you get a spike bottom reversal bar. Now that's a bullish bar. So this is kind of a little pennant right here with a, even though, yeah, you could draw it off at the top of that, even though this bar doesn't fully participate in it. And it ends with a bullish bar. That's great. This is, notice too, by the way, that now these are not strong parabolic moves, right? They're just 1 bar parabolic moves, 1 strong bar. But you can get these type of pennants and flags on these type of moves that have even just 1 or 2 bars that may not be super strong multi-bar parabolic moves. But if you notice, like this one here, your percent D does not come down to 55, right? So, but you are getting, actually let me get these lines out of the way. If you look at it, you're getting, some lower highs. This high is lower than that one, this high is lower than those two. These 3 are all lower lows. Then you get your inside bar. If you put your crosshairs on here, let's see what we get. Okay, you don't get your K angling up until there. Now, this is a point on these spike bottom bars. I don't always require K to be angling up on the spike bottom bars. That's a decision you can make for your own trading. Again, it's higher risk if you don't require that. But here K is going perfectly flat. At least it's not angling against the trade. So if K is flat, then I will often take a trade breaking the high of a spike bottom bar. Now here, this is not a bullish bar, so this one would not be quite as easy to do as when you get a bullish bar. So in other words, if I get any kind of bullish candlestick bar and K is flat, not angling in my direction, I may get aggressive and go ahead and enter above the high of that bar anyway. But again, if you want to be conservative, wait for K to hook. Over here, actually here we do get a hook on K there, and actually would get triggered into the bar there. But then it goes sideways, would scare you a little bit. Your stop is below the low of that bar, but you never get stopped out, and you catch the 3rd wave. So this would be basically a 1, 2, 3, 4, 5, 6, 7, a 7-wave parabolic move. Remember, this is not a regular wave count, and this is a very moderate parabolic pattern because, again, these are just little 1-bar patterns. Now this one's 2, so that's a little stronger. Alright, and finally here's another interesting one. I'm just trying to show you some different variations because, like I say, these things are rarely formed perfectly, so just trying to show you some different examples. So here's a parabolic move that goes 1, 2, 3, 4, 5. This one comes down, that's a neutral bar. This one, really not going to be able to trade this one. It's not high probability. It comes down, and they will acknowledge support resistance, but quite often what you'll find in these parabolic moves, by the way, this is another good point, is because the energy is so strong, it'll slice through support, and then often will come back and respect it. And that's what's happening here. It slices through, comes back, respects it, boom, goes down. Look at this part, comes to the 50 MA, slices through, comes back. And then we get a little, kind of a flag type pattern here, in the sense that we're getting a little move up, a little higher highs on each one, a little higher low on each one, and then our last dramatic move down. Again, notice the bottoming pattern, spike bottom reversal bar, rejecting this price, inside bar, and then comes back up. So a little flag there. This could even be considered a little bit of a flag if you eliminate this part here, which again is just testing this lower area. On this one, there's really no green entry, as I mentioned. On the second one, let's see if we have anything good there. So here's where you get K angling down. As I say, K angling down is not going to happen that often on these. You get a 1, 2, basically 3 bar retrace on it. But what you do get is a fairly decent candlestick bar here, in the sense that it's engulfing the previous bar. Okay, so this real body engulfs that real body. Still both narrow range, and that's where these get a little tricky. In fact, I will tell you up front, parabolic patterns are rather tricky. They're not the easiest thing to trade, and a lot of them will not be tradable. So be very, very careful with these. Only trade the ones that you feel confident about, and the rest just let them go. They're such erratic, exuberant patterns that a lot of times they are rather disorderly and chaotic. So you don't want to trade them. You don't need to trade every one of these patterns. In fact, most of them you're going to let go if you're wise. Just wait for the few. It's just like everything else. Wait for fewer, better trades. Don't worry about what the market's doing. Don't worry about it leaving you at the bus station. Make the market come to you. Make the market set up for a high probability situation, and then only trade during those times. That especially is applicable for parabolic trades.